Joining us from Sydney this morning, we have Richard Yetsenga, Head of Global Markets Research at ANZ Bank. Good to have you back on the program, Richard. And as I said, it seems like we always talk when the world looks to be falling apart. So what about the yen? You said 70 in 12 months' time. What are you seeing?
Look, I mean, currencies at the moment are really all about balance sheet repair, and the currencies that, are the beneficiaries of that process are doing well. So, this is not really a question about, that funny word in fundamentals. It's really just about flows, and at the moment the yen is the key beneficiary, closely followed by the dollar, and everything else in the currency space is subordinate to that.
Tell me what currency markets are telling you right now, because, boy, look at the U.S. dollar strengthen, people rushing into the safety of Treasury yields, German bonds. There seems to be a bit of panic, don't you think?
Look, there's enormous concern. I mean, it does obviously, I guess, remind you of the 2008 period. The problem is, what's going on in Europe is much bigger than, one mid-sized global investment bank potentially having, having solvency problems. It's a bigger issue about the structure of the Eurozone, and there are fears out there about that, how that will proceed. What this does for the market is, next, about a week from now, I think on the 6th of June or the 5th of June, the ECB meets. That meeting is shaping up to be absolutely critical for the market environment. I wouldn't say the ECB must, but, well, they must deliver some sort of policy response next week, I think, or things will get quite a bit worse.
Yeah, well, their back is against the wall, Richard. So tell me, what are you seeing for the common currency? I mean, could we see even lower levels from here, given that people are expecting possibly a 50% plus probability of a breakup?
Look, the problem is they need to put those fears to rest through some sort of policy response. The concern, I think, on the part of policymakers is if there is some risk of some countries seceding from the euro, any credit extension to those countries, effectively becomes a bad debt problem, and I think that's probably influencing the way the ECB is behaving, and it's certainly influenced the way the more creditworthy Northern European countries are behaving. The simplest signal from the ECB would be at least some action on interest rates, and what would be most helpful and seems not too far out of reach is some pan-European bank bailout / deposit guarantee program. That would help to stem the flight of deposits from the weaker countries, and perhaps give the wealthier countries at least some room to think about some financial assistance.
Oh, right, but barring that, where could we see the euro trade? I mean, what are your expectations for the common currency? It's
just, look, it will just keep going lower. My view actually has been that we're getting close to some sort of policy response that, given the extreme nature of sentiment and positioning across pretty much any financial market, that we should start thinking about the euro having a meaningful correction, if not a major turn, but we're just not getting the policy response. And this is not just out of Europe, but it's actually also out of China as well. Overlaid on the European issue is the fact the Chinese economy continues to, I think, disappoint the more bullish expectations in the market, and Chinese policymakers are not showing any particular sense of urgency. So we're seeing some hints about some bring forward of fiscal stimulus, perhaps a few interesting press stories about reserve requirement cuts or even interest rate cuts, but nothing which says we're liable to get a significant policy response. That's what markets need right now.
Okay, Richard, leaving with this, what should an investor be doing right now in currencies? I mean, do you short anything? Do you go long on something? What is the best play?
Look, I think you need to be short. The two trades I would have, or two views, are to be short risk into the ECB meeting next week. As we get closer, I think we need to reassess that, depending on how it's shaping up for how the ECB might respond. And secondly, I think you need to own the yen. It's not... that's probably the one currency position out there which is not aggressively positioned, and fundamentally, in any case, I think the yen should be stronger than many think, and the risk environment is just adding to that case.
All right, Richard, thank you so much for your time this morning. Richard Yetsenga.